Good morning, everyone. Today is May the 23rd, and this is Trading Market Futures in 5. We've had a couple of interesting things happen overnight. The dollar has broken out. We want to watch that very carefully because it is going to impact a large number of things. The Fed said hold pat. Everybody else is weaker. We're the strong man of the bunch, and that is breaking the dollar out. And that's going to be a bit tough in the long run. So we'll have to watch for that. On the top of that, we've had rains and really terrible storms in the plains just as the dollar is breaking out. That is going to lead to a couple of things, but very importantly, you want to watch all these commodities that seem to be in this downward draft. They are going to start turning, and commodities are going to start spiking and moving upward out of this downward trend. So this is what we want to watch. This is just my thought. We'll see it play out. But if you're looking for bottoming formations that make the turn, that's a really macro view of something that could be moving for quite a few months. All right, so let's take a look at the ES. You noticed yesterday I said 28.57, a huge deal. It stayed here through the entire time into the Fed. The Fed spoke, we bounced, and could not hold this resistance edge. For me, I was waiting up here for the short, never came to me. And so in the end, my stop was too tight on the first break. It went right into the resistance zone, did not allow me to reassess the formation. And then I was away from the charts. Now we're down here. This significant support. Take a look here. First place it's going to have to get over from this 28.26 is up over 28.36. So we've got a long bounce action sort of in play, but that's fairly weak momentum. Now, you remember I had a Gartley formation here. It was that uh, pattern that I had up here, and I took it off because we'd broken this edge. And so that invalidates that formation, but it could mean that this area is the real stopping zone. I have no idea. Here's what I do know. I know that this kind of motion says I move into resistance, and then that resistance sends me into support. If my support continues to break down, I have no choice but to look to lower edges, which confirms our initial slant from 3 weeks ago that we have a breakdown in the market that is going to be slow grinding. Let's go to the NQ. You can see the wave formation. I've left it here for you to look at. It's broken. If I move it to this edge, right, and that is the breakdown versus the level, we could still have that form, right? If I did this for this formation, right, I want to show you how this works. And Motive Wave just put out their new beta. Oops, it's not going to give it to me now. So I'm going to draw it for you. You can either let it do it for you or you can do it yourself. So here's my X, my A, my B, my C, and that's where it's going to hold out. Now this suggests that C might be all the way down here. So that actually is quite interesting. We'll leave that for a look to see what happens, but this shaded area means that it could hold in any of these zones. So we'll watch. Here, this is a natural bounce event. If this is the case, it might be, but as you know, this is tremendously weak. The big thing is that there's not a lot of pressure to the downside anymore, so we could see a relief bounce in the NQ today. The YM also breaking, right? If we sit here, this is just like the ES. It's bringing it all the way down here, potentially. So we'll see what's going on. And then the bounce looks pretty hefty. Not really sure about that either. So it could begin as low as here and run well higher than our recent highs. So for the YM, it's broken this 579 area. We know how important that is. It's come into 460 to 465 and bouncing. My thought is that you could catch the bottom here, but it's no place to hold the trade long. It's just too dangerous. Oil falling off a cliff again. What's affecting this? Build right? We had build in everything but gasoline, and so that is affecting things. Um, Heard a very interesting commentary this morning on the state of Saudis and what they might be planning. This, they're just going to continue to cut production, in my mind, until they can keep this moving, because I think that they are trying to exercise some more strength in that environment. If we happen to look at an ABCD pattern, and I like these because they give me that sense of what could be happening. This is almost textbook ABCD. That puts it down at 57, right? And so, or lower, 57.70. We've got a ton of support sitting right around here. Old resistance, new support. I like that kind of formation. This is somewhat technically divergent, but look at the volume. It's just been selling straight down. Really think that's associated with the price of the dollar. Right now, we're taking a look at gold. Gold has an unusual relationship with the dollar, and it is one that sometimes connects, sometimes doesn't. The market, however, as it drifts lower, we're going to see what's going on here in gold as just a standard bounce event. This is a trending formation, right? Lower highs and lower lows in general, but we are trying to hold this edge. So what we need to do is bounce up above this area. There is the significant draft, and it is a headwind that's going to stop gold from moving upward. That is going to be the price of the dollar, and the dollar is on a spike. It's going to keep this one damp. It could bounce up into 81, 82, maybe even 87 if the market really sells off. But in the end, if the dollar keeps moving up, which a lot of people are going long the dollar on this breakout, I would like to see a positive retest of that area because there's so much of a cross current. I expect that the bounces could give rise to fades. So we want to be really careful here. It is a risk on environment if I've ever seen one. It is very, very, very prickly in the market right now. Not straight up, not straight down. Big spikes down that fade and then hold. Just be careful. Take care.